welcome you to the Managing Money While Unemployed workshop. My name is Leslie Stearns. I am the Talent Development Facilitator at the Workforce Solutions Office out of San Marcos. The rural capital area covers the 9 counties around Travis. So I thank you for joining today and hope you get some really good information. The objectives of the workshop are assess how to manage money and relieve financial stress, create a monthly budget, brainstorm ways to save money, and learn about community resources and programs available to you. The first steps in managing your money would be to assess your financial situation by reviewing your monthly expenses and income. Make changes in your spending habits to avoid getting into debt, and develop a plan on how to survive financially in between jobs. Dealing with financial stress, taking control, trying to make wise decisions, avoid temptations such as excessive drinking, overeating, or compulsive shopping. How much money do I have? It's important to know how much money you have in your income, so you'd want to make a list of all of your assets. Your employment insurance might be part of that, your savings, a spouse's or partner's income, child support, or other resources. Take stock of your monthly expenses. In the workbook that you will receive after this workshop, on page 3, there is a monthly expense report that you can fill out. Things that you would want to include on that report or form would be your mortgage or rent, your utilities, your car loan, food, internet and cable expenses, student loans, credit card payments, insurance, and any other miscellaneous payment you might make monthly. It's important to track your cash purchases. Record out-of-pocket expenses for a week. Most people are surprised by how much they spend on incidentals such as coffee, fast food meals, dry cleaning, etc. Compare your expenses to your income. Do you need to spend less, or should you generate extra income to balance things out? Recommended budget percentages showed by the source of Every Dollar Budget. Housing, the percentage of your overall spending, is anywhere from 25 to 35% of your income. Utilities are 5 to 10%, food 10 to 15%. Transportation, gas 10 to 15%, health insurance 5 to 10% for health insurance, and just regular insurance like your car insurance or your homeowner's insurance is 10 to 25%. Personal expenditures would be 10 to 15%. Entertainment 5 to 10%. Savings 10 to 15%. And if you make contributions, that could mount up to about 10 to 15% as well. Monthly budget. What monthly expenses, and again on the workbook, can be reduced on page 3? How can you generate additional funds through temporary work? You could do yard sales, you could do sales on Facebook, right? Buy now, all the different platforms that are out there to sell things that you might have in your house that you would in a garage sale. How to reduce expenses and cut costs. by cutting on non-essential items such as higher-priced restaurant meals, cleaning or lawn services, shopping sprees for clothes or shoes. That would help you save money. Brainstorm ways to save money, such as coupons.com. Could I cut out my cable TV possibly for a while? What are other ways to save money? Talk to your creditors. You may be able to reduce payments by negotiating or reducing postponed payments by for the following, such as your mortgage, your student loan, or your credit cards. Currently, with what is going on with the pandemic, if you contact your credit cards, they will postpone your payments for at least a month, and some will even do it for 2. You might be able to do the same thing with your talking to your landlord as well. Use your credit cards wisely, okay? So decide what purchases to make with a credit card. Beware of that higher percentage rate on cards. It might be better to go ahead and pay cash for some of your expenses. Be sure to avoid traps so you don't get into debt. Payday loans sound very appealing, but they often have a high interest payback rate. Try not to fail to make minimum credit card payments. Again, applying for cash advances on a credit card could produce a higher interest rate as well. And beware of loans against your 401k. If you fail to pay back a loan on a 401k savings plan, sometimes you forfeit the entire plan if you're unable to pay the loan. Protect your credit score. Check your credit score and prevent it from decreasing. You can go to annualcreditreport.com for reports from the 3 major credit reporting bureaus. Excellent credit scores, good credit, fair credit, poor credit, or bad credit. You don't want to fall below 600, and an excellent credit rating is 750 or above. So it's very important to keep an eye on that. Select the best health insurance plan you can. It might be what's best for you to take your COBRA plan if you had separation from work, or would that premium be less or more if you went to the Affordable Care Act insurance program through the federal government? So weigh out all of your options to make sure you're spending your pennies wisely when it comes to your health insurance and your family's. You might be eligible for IRS tax credits. See if you can reduce your taxes through earned income tax credits through the EITC website. Also check out child tax credits. You might be afforded tax breaks. There are other resources that you can go to that will help you with your finances. Find out the best resources for managing money, such as free workshops at credit unions. For help with debt, you can contact the National Federation for Credit Counseling at www.nfcc.org. In workintexas.com, which is our website that helps job seekers and employers meet up together and find work and opportunities. There are several different things that can assist you with your finances. We have something on www.workintexas.com called a budget builder. And on the home page, you can click the portal for additional financial services, which will help you track your overall and budget. This concludes the workshop for today, and we will have Q&A.